European Union energy ministers failed yet again to strike a deal on a bloc-wide cap on gas prices Tuesday night. Countries like Belgium, Italy, and Poland are demanding the measure, which they say would shield their citizens and economies from high energy prices. But that's put them at odds with Germany and the Netherlands, who worry that gas supply will simply bypass Europe and go to buyers prepared to pay more. The ministers hope to be able to reach a deal at their next meeting on December 19th. Carol Nakle is the CEO of Crystal Energy. Welcome, Carol. Can you tell us why it's so hard for EU energy ministers to agree on this gas price cap?
Hello. The price cap on natural gas within the EU has been quite a thorny issue where governments are not aligned in their views for different reasons, including their dependence on natural gas, the importance of natural gas in their economy, their overall attitude towards government intervening in market mechanism and putting a cap. And also there is the fact that the opponents of the price cap cannot really find a sensible level, not even their opponents, even those who are for the price cap, even if they agree on the principle of the cap, they cannot agree on the level of that cap. So at what triggers, what level of gas price we should see out there that should trigger the price cap? And this is, I think, why we're getting all these divisions and controversies within members. But in the last meeting that the EU had, I think we're getting more positive signal that we are closer to reaching an agreement on the price cap.
How should they go about it in a way that makes sense? If you were to design the gas price cap yourself, how would it look like?
I wouldn't design one to start with. I would leave it to the market. I know this is the economist speaking and not a political solution, because you do have people across Europe and elsewhere struggling with high gas prices, and governments feel the need to intervene to ease the pressure, the economic burden on their electorate, and also try to appease inflationary pressure. But we are seeing that inflation has started to slow down in some major economies. And actually things may take a while for markets to clear, but markets tend to be much more efficient than governments as solving a crisis. So I fear today with government trying to meddle within pricing mechanism and entering a relatively new territory for the EU, that is much more complicated than easier said than imposing just a price cap on gas markets. But I understand the political rationale, but economically speaking, I fear there will be lots of hurdles, not only in the short term, but also in the long term.
So do you think this is a tokenistic move and a gas price cap actually won't make that much of a difference?
It depends on what kind of prices we're going to see out there in the market, if they are going to be way above the price cap, because mind you, you would expect gas prices to spike when, for example, we have very cold blast, for example, as we saw in the UK this week, for example. So that by itself is quite normal to see price spiking during the winter season for natural gas, because people want to use more heating, they want to use more electricity, and the prices will increase more in countries that rely greater on natural gas. But how long would that spike would stay? That would determine whether the price cap would be effective or not, or it's going to be toothless. Because if you have a gas price above that price cap for a longer period, then yes, you can say that the cap is effective. But if it's going to be just a matter of few days and then it goes below the price cap, then what's the point of having that price cap?
A complicated mechanism, and success is not assured. Carol Nakle, she's the CEO of Crystal Energy. Thank you so much for taking the time today.
Thank you.